Hello, good afternoon. You're watching Market Fatafat on ET Now. And with me is Shrishti Sharma as well. Shrishti, markets, today obviously we're seeing a good move coming in the markets. Look at the Nifty as of now, above the 19,100 mark comfortably and touching and nearing the 19,200 mark. So yes, at the all-time high levels is what the Nifty 50 is trading at. Sensex 2 comfortably above that 64,500 levels as well, up more than a percent on trade today. That's the Sensex coming in there as well. Let's look at Nifty IT. That was among the top sectorial gainers as well. Nifty IT that is trading with gains of more than 2% as well. Pharma space, let's look at what the Nifty Pharma is doing as of now as well. Was trading with some bit of a gain over there. The Nifty Pharma was among the top gainers as well. Today, trading with gains of more than 1%. What was not doing well was the metal space. Nifty Metal, that was down and out in trade. So keeping an eye out on the Nifty Metals. As of now, subdued trade is what is coming in even for the Nifty Metals. Moving on, let's look at FMCG. That's one of those movers. Yes, why? FMCG surely was among the best performers, but today FMCG is flip-flopping between the red and the green, and yes, made that recovery since the last time I checked. It has seen a sharp recovery, and Nifty FMCG is too trading with gains of more than 0.3% in trade as of now. In terms of individual names, we will be talking about stocks specifically, but let's look at what MCX is doing in trade as well. That was down and out in trade, and was locked in lower circuit at one point of time as well. In the Nifty 50, we have Adani Ports, HDFC Life, Apollo Hospitals, which are among the top losers. While in terms of the top gainers, we have M&M, IndusInd Bank, Infosys, Sun Pharma, Hero Motor, top gainers as well. So surely that auto pack is buzzing in trade, as well as other than that, we're seeing even the IT space, which is doing quite well. So that's how the market setup is looking like this afternoon. But on that note, let's get started with all those stocks that are buzzing in trade, either on the back of news flows or on the back of technicals as well. And on the technicals, today we have Amar Singh joining in with us from Angel One, while from the research team, we have Lisa as well as Ashesha joining in with us. A very good afternoon to all three of y'all. And as always, I'll be starting with the first stock that is in focus for today. And first stock that we're going to talk about is Tata Communications. Now, the company has announced its second acquisition, and they are to acquire 100% stake in Kellerai Inc., which is for around $100 million. The acquisition is expected to be completed in the period of 6 to 9 months. So now, how does this valuation actually stand? Because it's listed, the company is listed in the US markets. The stock is trading at around 3.96 times, while Tata Communications is paying $7.25 I beg your pardon, was trading at $3.96 per share, and Tata Communication is paying almost double, that's 7.25 per share in terms of the acquisition. So compared to the last 6 months in terms of the average price, Tata Communication is paying 25% premium for Kellerai, and had acquired MGAG in 2021 as well, versus the total. So the valuations over there is something that is concerned. The deal is valued at 0.7 times EV to sale and 2 times that in valuations of Route Mobile when you compare it. Now, Tata Communication plans to EBITDA break even in the near term. Double-digit EBITDA margin is what they're talking about as well. So keeping an eye on Tata Communications today, yes, recovered from the lowest point, but as of now still trading with cuts of half a percent, Shrishti.
Okay, moving on to the next stock in focus, and from the healthcare space, Amritanjan Health is in focus, as this particular counter is up 11 to 12% in today's trading session, and that's after the board approved the buyback proposal, wherein they have announced that they're going to be buy back the shares at the price of rupees 900. What they also said is that the company plans to buy back 3.2 lakhs of shares. That's representation of 1.1% of their total equity, worth 28.8 crores. And do remember that this particular buyback being done at a 35% premium to the last trading session's closing price. So definitely a good news, but the key to watch will be the acceptance ratio. But on the back of this particular news flow, Amritanjan Health is soaring in trade right now.
Absolutely. Let's move on and talk about the first stock on the technicals, and Amar, JBM Auto. I'm just shocked looking at the numbers right now, because in the last 1 year, from 400 and 450 levels, it's managed to touch today at 1,293. That's more than 200% gain in just the last 1 year. How is the stock looking like on the charts? Would you still see a buy, or would it be time for someone to book out their profits now?
Yeah, I would say that looking at the charts clearly shows that the bullish momentum hasn't declined, and the momentum has been gaining day by day over the last, if you look at for the last few trading sessions, precisely from 7th of June onwards, where it had a major breakout because the stock was unable to breach the 8 levels, and then breaching above that level, the stock is inching towards the 1300 mark. And also the volumes have been significantly higher since 7th and 8th of June. So that really shows that a lot of smart money has moved into the stock, and the stock's long-term trend continues to be bullish. So those who are long, they can do some part profit, but rather I would say they should hold on to till we see some bearish divergence or some sort of stoppage in the stock's upside momentum.
Okay, JPM Auto is in focus on the back of technicals. Moving on, and Lisa, coming to you, all these AMC names are definitely the news makers for today, but how this particular news flow coming from SEBI is going to impact the listed players?
Well, yes, AMC stocks are in spotlight, and we can see HDFC AMCs, UTIMC, Nippon AMC, they are surging anywhere between 8 to 14%, and this surge has been prompted by SEBI regulations announcement. They said that it is regarding a significant change in old draft TER, that is total expense ratio proposal. Well, in the last few months, AMC stocks has been underperforming, and that is because of this TER notification. And based on the consultation paper, the earlier draft consultation, brokerages had also reduced the earning estimates, and that was in the range of 5 to 15%. But now SEBI regulators have assured that with the new draft proposal, that is expected to appease the mutual fund industry, and that has led to a shift in the positive sentiments of the investors. Morgan Stanley has also come out with a note on HDFC AMC, and they said at the margin level, this looks positive for the AMC industry as a whole. So, because of this news flow, we can see AMC stocks surging in trade today.
Absolutely, keeping an eye out on those AMC names. Let's move on and talk about Piramal Enterprises on the charts then. And I'm at 952 currently. How is Piramal Enterprises looking, would you say?
Yeah, looking at Piramal Enterprises, what we see is that the stock has witnessed a significant up move from almost 630 levels that was in the last week of March. Currently around it's almost 950. Here we are finding some sort of profit booking coming in, or some very strong resistance around the current level. So I would say 980,000. That's going to act as a very strong resistance zone. So those who are long, they should look at booking some profits, because till the time we don't see the stock sustaining over the 980,000 zone, I would say the stock could witness some profit booking. And once the stock starts trading consistently above the 980,000 zone, then the stock definitely has the potential to rally towards the 1150-1200 mark. Now, the short term and the medium term momentum continues to be very strong, but as I said, that's a major zone of resistance, so some profit booking definitely should be initiated at the current levels.
Okay, Amar, that is Piramal Enterprises and your view there. But Amar, do hold on with us, as well as Lisa and Ashesha, do hold on with us, because we have a management with us joining in this afternoon, and that is a 361 WAM, because they have invested in Neolive. So we have Mohit Malhotra, who is from Neolive, and Karan Bhagat, the founder and MD and CEO at 361, joining in with us this afternoon. Very good afternoon, Mohit, as well as Karan, and thank you so much for joining in with us this afternoon. Mohit, I'm going to ask you the first question, and that is in terms of if you could just talk to us about the business of Neolive, and what is it that is so unique for you that you went and invested, made a strategic investment here?
So we conceptualize Neolive, to be a foremost residential platform in India. And if you look at, residential space in India today, we have developers and we have fund managers. The key issue is, in terms of fund managers, they're relying on third-party developers and there is no control. And if you're just a development company, you're always, lacking equity. So we felt, there's an opportunity to create an integrated platform with both the fund management business and also a development business. What it does, it gives us end-to-end control, and, from capital to customer. The value for an investor, for our fund investor is, they're not relying on any third-party developer. There is a complete control. For our end consumers, the biggest value is that they're getting a high-quality developer with very high equity-backed funding, and hence, timely delivery and quality delivery is assured. So that's how we have envisaged Neoliv, and it's a very unique platform in the industry today.
Okay, Mohit, but once again coming to you, because just wanted to understand how much are you diluting and how do you plan to utilize the funds?
So we are, doing a very minority dilution today in the business. We are using these funds largely for working capital needs for brand building. We would not be deploying this capital towards land or capex. We are going to raise capital through our fund, through the AIF, where 361 is going to be, helping us out in that journey. And we will be deploying the fund capital in project SVPs, do joint ventures with the landowners, and that's how the business is envisaged. So the whole land part of the business is going to be taken care by the fund management business, and the entities, Neoliv entities, both the fund management company and the development company would act as a service provider for our funds.
Karan, what does this investment actually mean for 361 WAM, and what would be specifically?
I think for us at 361 WAM, I think there are 2 or 3 objectives which really kind of are synergistic for us from an investment perspective. I think first, Mohit obviously as an individual comes with a huge amount of experience on real estate itself in his earlier avatar and even before. And for us, honestly, his determination and grit in some ways is a landmark or is a symbol of professional entrepreneurship. Pretty much in the same way we've kind of built out our business, and that's something which we would love to support. On the second side, I think within our own wealth and asset management businesses, there are certain asset classes which we like to go out and build out on our own, like our listed equity business or our unlisted equity business, even our credit business. And there are some other asset classes which we really want to partner with platforms so as to be able to get the right returns and right platform and right risk to our clients. And I think equity investment in residential real estate is one such platform where rather than getting into ourselves, we would really like to partner with the best. And for us, in some ways, both the equity investment in the platform as well as the venture to go out and collect funds for the AIF really is a common goal towards that purpose. So in some senses, it's a combination of an equity investment with a professional entrepreneur as well as partnering a platform on the equity side of real estate, essentially an asset class which we wouldn't venture into our own.
Okay, with this we'll let you go on that. Thank you so much, Karan and Mohit, for joining us today on ET Now and helping with the growth outlook of 361. But with this, viewers, let's once again get back to all the stocks that are buzzing in trade today. We have our technical experts as well as researchers onto the show. And for the next stock, Ashish are coming to you for the next one. What's happening with Suzlon? The stock is up 31% in the past 1 month, but what are brokerages highlighting on this counter now?
Well, yes, you're right. The stock is buzzing today and it has been buzzing for the last many trading sessions. Today, of course, it is in focus on the back of a brokerage note that has come in. ICICI Securities has come out with an initiating coverage note. They have initiated coverage with a buy rating, and they've given a target price of 22 rupees per share. They say Suzlon is the market leader with respect to its EBITDA margins, and as far as growth is concerned, ICICI Securities is penciling a growth of about 35% on a CAGR basis going forward. They also say that they expect market growth. A repaired balance sheet is also an added positive for this particular counter, and leveraging is also a thing of the past. So positive note coming in from ICICI Securities, and that is the reason this counter is in focus today. The stock is up 15% in the last 5 days and has zoomed nearly 31% in the last 1 month.
That's Suzlon, but let's move on and talk about Biocon charts. And Amar, how is Biocon looking like today? It's trading with gains of almost 6% as of now. What are the charts indicating for this now?
Yeah, I would say that Biocon, we've seen some consolidation happening on the charts for quite long after a sharp correction. Because if we go back, we see the stock correcting from almost 450 levels to 200. Now it's back to 260 odd levels. But the stock needs to sustain above the 275, 280 for any major up move. So what it could effectively mean is that the stock has bounced back from the 200 levels to 260, currently trading around those levels. But the stock needs to sustain above the 275, 280 for any meaningful rally towards the 320 mark. So I would suggest that those who are long, they should look at booking profits around the 275, 280 zone, because if that's not taken out, then we could witness some profit booking in the stock.
Okay, let's move on to the next one, and that is MCX that is in focus today. And why is that so? Because now the extension of its software support services contract with 63 moons for another 6 months has happened, and the cost of extension is at 125 crores per quarter. So let's keep an eye on MCX. That's down in trade, but 63 moons is buzzing in trade as well on the back of the same news. Now, what has happened for MCX in the previous extension was 81 crores per quarter. Now the impact is additional 250 crores hit on the profit and loss in FY24 is what is expected. Cumulative payout to 63 moons is going to be at around 472 crores. Mainly, this is due to the delay in implementation of the new trading platform. So on the back of this, we are keeping an eye out on MCX trade. The payout is expected to be higher than the capex for new software, and Investec on MCX, they've actually downgraded MCX to a hold from a previous buy, and they've cut the target price to 1,715 rupees per share. Yes, it's still higher than the current price, but yes, they've downgraded the stock currently, and even Morgan Stanley, they're maintaining an underweight rating on the stock and a target price of 1,125 rupees per share.
Okay, moving on to the next counter then, and Amar, coming to you for this one, Century Plies, what you have picked up, and the stock is not very far from its all-time high levels. Do you see that coming in this one?
I would say that looking at the way the stock has rallied from almost recently from 440 levels, and I would say that the stock is currently around 660. And see, the best part is that the stock is also regularly witnessing increased volumes and delivery quantities. So that clearly establishes the fact that there is money which is moving in the stocks from at least a medium-term perspective. And looking at the charts, be it the quarterly charts or the weekly charts, what we see is that the momentum is there to stay. And so any dip in this counter would be used as a buying opportunity. Now the stock has got very strong support around the 550-600 zone, and upside, as you rightly said, the stock is moving towards its all-time highs, which is close to the 750 mark. So it's around 660, so it's around 15% from the current levels. But the way the stock has been rallying, that level also could be reached.
Okay, moving on to the next counter in focus, and the counter that is focused is Gateway Distriparks from the logistics space. This particular counter is seen to be buzzing in trade on the back of the news flow, which says that the company has actually commenced with its operation. It's a double stack services commencement between Gateway Distriparks and ICD Viramgan and Mudra Port, where they announced the commencement of its double stack rail transportation services between its inland container depot in Ahmedabad to Mudra Ports for its export-import trade customers. So definitely a positive news coming in from Gateway Distriparks. Nevertheless, the stock is a slow mover and holding a gains of 0.5%.
That's Gateway Distriparks for y'all, but let's move on. And the next stock on the technicals is Gujarat Pipavav. Amar, last 6 months seems like the stock has picked up some pace and momentum. Is that here to stay? What is the upside that we can expect from Gujarat Pipavav?
I would say that looking at the stock has been consolidating for a very long time. I would say for at least 7 to 8 weeks, it was unable to breach the 115, 120 zone. Now what we're finding is that the stock is sustaining above these levels. Technically, if you ask me, it's very strong on the medium-term charts as well as the long-term charts. But for any meaningful rally, the stock needs to sustain above the 125, 130 zone. So that is going to act as a crucial zone of resistance. Yeah, if once that is taken out, then the stock isn't having very strong resistance coming anywhere near. So the next level to watch out for the stock would be around 165, 170 odd level. So watching out for the 125, 130 zone is very essential. What we saw day before yesterday, that is there was huge volumes on 27th of June. So that clearly shows that there is a lot of interest which is happening in the stock. But as I said, the levels to watch out is 125, 130. Above that, then the stock would rally by 15 to 20% in a short span of time.
Okay, moving on to the next counter. And Lisa, what's happening with TD Power System? The stock is up 8.5%. Tell us the news flow.
Well, yes, it's in focus on the back of a block deal, and it's one of the many block deals that has happened in June. In fact, the June block deals, it was the highest in the last 3 years. So back to TD Power, the company promoters and shareholders, they have sold around 24.2% stake, and this is worth around 800 crore via block deal. Offer price was around 214 per share, and the block deal took place in pre-opening session of the market, and as many as 3.72 crore shares were exchanged. Look at the share price. It has given fantastic returns to investors. In YTD, it has given a return of around 85% as against Nifty returns, which is just around 5%. So yes, TD Power, as we can see, the stock is surging in trade. It's up around 8.5% as we speak.
Let's move on and talk about Amara Raja batteries on the chart then. And Amar, when you look at it in the last 1 year, from 450 levels, it has started moving up and today trading at 680. On the charts now, what should we be expecting from Amara Raja batteries?
I would say that the stock was on a one-way, you can say one-way street from almost, if you look at more than from 1,000 rupees, the stock came down to as low as 430. Now currently it's around 680 odd levels. So what we are seeing is that the stock is again gaining momentum and it's looking positive on the monthly charts as well. And we've seen some very good buying interest coming in the stock since April. So we are seeing some good volumes on the delivery side. So that really shows that there's something positive which is happening in this particular counter. And also the stock taking out the resistance level, because 650, 660, that was a zone of resistance, crucial resistance, I would say, that has been taken out. So the stock sustaining of the 680 levels, and the stock has a potential to rally towards the 740, 750 mark in the short term.
Okay, 740 and 760 are the short-term targets for Amara Raja. But moving on, and Amar, once again coming to you from the auto OEM space, Tata Motors is on your radar. All these passenger vehicle companies are seen to be buzzing. Well, what's special about Tata Motors?
I would say if you look at Tata Motors has been very strong on the long-term charts. So clearly that would imply that any correction is to be used as a buying opportunity, and also we're not seeing any significant decline in the momentum. So what we saw for the last, I would say, few trading sessions, it was caught in a range between 400 and 500 zone. So, and then it reached that level. And if we go back in time, we see that somewhere around November of 21, it was making a high around 520, 525, 30 levels. That also has been taken out, and the stock is closing towards the 600 mark. So clearly shows that the momentum is there for the stock. And also if we go back in time and see, the stock is approaching its all-time highs. And on strong bullish momentum. So I would say one should definitely hold on to the stock from a long-term perspective.
Okay, that is Tata Motors. Keep an eye out on that view. But on that note, viewers, we're going to slip into a very short break. Don't go anywhere, because we'll be back with more stocks after this short break. So don't go anywhere.